Mm, you can see how here we got bounce from the ground, and that is important because this support area has been tested. This yellow line was actually in the same plane as the ribbon. As you can see here in the past, we failed to support it. We tried again. We play above it, then we play down. Then we have some volume that hit us to the downside. This market liquidation area. But as you can see, it's a pattern that is commonly known as an inverse bark pattern. And this is greatly because of market manipulation or big volume dump, if you want to see it in another way. So this is commonly to gain some time in the big market participants, and for liquidity purposes. So now that we get back and start to trade about it again, we are building some new volume above the trend line and above the ribbon line. So it's important that we continue that way. So I was expecting liquidation downside prior to the bull trend, the big bull trend, but since we already made this part, we are not sure yet if we can expect a liquidation downside that is common. As you can see in shorter times but in here, we have the liquidation area here, and you might expect that we can continue forming a higher low, but actually this candle we get back all the way back to the bottom of the area to grab every liquidity available. So this kind of movement plays every time prior to the big movement, like in this section here. You can see even here in this candle we have a big wick that has no place in an uptrend, but it's a market push down to try to gain a better entry level or liquidation area. Then you can see how we exploded to the upside, then again a fake out to the downside. Then we have the big run up to the upside. We can trade this, and it's really not that big of an issue, but you need to contemplate that your stop and loss and risk to the downside is not that easy to get into, but you can put some entry levels on the downside, try to grab it and build it up for the run up more than shorted, because if you get shorted, it's the same game for the upside. You can have really long weeks to the upside to grab your liquidity if you are in the short term. So you can play like 6 or 5x in the leverage, but you need to be aware at how to play this market out. But we are pretty much building a structure to the upside, so you can expect a fast growth, but maybe some liquidity grabbing to the downside, and that's the the line that you might expect to have a good entry level, and if you manage to catch it, it's going to be profitable, but you're not sure that you might take it. You might even put it right a little on top of the line, so you might have a better chance. But if you have a really long week to downside with a high leverage, you're going to be wiped out. So, I mean, even holding just is a good, safer bet. If you are trying to build a long run wallet, you might be safer to use hodling, because these kind of assets can have a really good return in the medium to short term in this kind of markets, in an uptrend market. So you might be better, but if you have like small percentage of your wallet, like no more than 5-10%, you can play this out, but always managing your risk, and you need to be aware that you might be losing some money, almost sure, because nobody has the magic wand for trading, but nonetheless, there's still a good amount of money to be made in Binance, Bybit, or any other that exchange you might like. I trade in Bybit, and it has been working for me. It's pretty safe and not sketchy, and it works good for me. But yeah, you have that trend there, and you go to the 18-hour history, you are still in the same kind of structure. Only when you start getting into the longer time frames, even the two-day chart, you start to see how this is just a small bump in the trajectory, and we should be much higher, breaking to the upside in the next several days. By mid-October, you can start to test the purple line here, a major trend line that we go back into the several weeks. You can see how it's a major area of growth for the price. We have a lot of confluence in the price. It's been working around that line as a bottom level support, and pretty much now as a top support. And it's really fair line, because you can see how the total market volume transaction also have this kind of movement, and it projects how the price is being underdeveloped against the other blockchain metrics for this particular asset. And we can expect high volatility after this line. And obviously we have high volatility. In this case, it might work for a bull market. There's a lot of retailers and big funds and whales that doesn't like to transact or play with assets prior to the run-up, so they are looking for certain lines to break, then they will enter the market. They don't mind to enter in the bottom. They might take like a line in the 150 or on top of the breakout zone, then than play that game because it's faster money. Not just waiting. So for us as waiters, we we're looking for to break that area where we can start to profit from their movement. We need to remember that they work differently from us. So we need to break these lines to be able to go to the next level of liquidity for the market.